On the stock that is about to move up in price, the company recently had earnings and is up significantly from that earnings. Q2 earnings was not great for most of the market. So to see GM do so well, to see this stock do well, it's bullish. The company is Carpenter. CRS is the ticker. They have collaborated with NASA's Jet Propulsion Laboratory on alloy materials for their Mars rover. They also have Alcoa as one of their biggest customers. Almost a quarter of their accounts receivable is from Alcoa, which is a big steel company. So let's jump into more about the stock, make sure they don't have huge customer concentration. Although if you're NVIDIA, it's a good thing, right? Because your customers are Meta or Amazon or ChatGPT. This is not financial advice, but I think CRS looks pretty good, and this earnings reaction is awesome.
This is Sam Putnam.
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 So this is the stock chart, and you can see that big volume move up here and the day two reaction. So it's definitely holding. There's plenty of volume here, and it gives this nice level around 300, pretty much exactly at 300, which is a super whole $100 level that it just happened to close at. Everyone sees that, so it's like a self-fulfilling prophecy. And now you just have to decide if the market gaps up tomorrow. Well, it is gapping up. If it stays gapped up, is it worth buying this CRS if it's up in these 320s, knowing that 300 is probably the best level to risk off of? You could also just risk off of yesterday's high. That's a super conservative approach as well. So 315. So let's back up a little bit on why I'm talking about a $300 stock. Look at this move. In the past few years, it's up almost 1,000%, depending on how you measure it. But if you look at the 1-year chart, it's kind of had some relative weakness for the past few months compared to the market. You see there in the background. And now you just have to decide, after this big earnings move up, can you risk 300? Can you risk 315? Are you risking all the way down to here? What kind of risk is healthy to take depending on your tolerance? And are you comfortable putting money in this company, which is not a high-flying AI stock? It's a materials company, a materials refining company. So let's look exactly at what it is and look at its recent earnings. So here's the revenue, over 700 million, 30% year-over-year increase on operating income. So it did well, 40% increase year-over-year on that earnings per share. I don't know exactly how this earnings per share works. Like, this could be a little misleading based on dilution or based on buybacks, or I'm not going to dwell on that. But guidance is good. So that's super positive. And then the CEO saying there's strong demand in aerospace, defense, medical, and power generation. So aerospace, I'm thinking Boeing, I'm thinking SpaceX, I'm thinking a lot of different companies, but more recently, in terms of aerospace companies, ACHR and Joby come to mind. So these are the electric vehicle, vertical, that's the EV takeoff aircraft companies. And they have been in this category of stocks that have just taken off pretty euphoric moves recently. This was in September. This had a big move up, gave back some of it. And then, of course, the quantums, RGTI, IONQ in that category. The Bitcoin miners turned data center plays, Iron, Cipher, Hut recently pulling back some, but huge euphoric moves. And then as well, the rare earth companies, UAMY, CRML, USAR, definitely coming back down to earth. All this to say, there's been a plenty of euphoric opportunities in some of these risk assets. Open Door as well, crazy run after pulling back and then having earnings, and has another earnings coming up. Rather than gambling on how these are going to move on earnings when they do have their earnings, some of them are so small, I'm not even sure those earnings are going to really mean anything. CRML, doesn't have it at all, I don't think. So they just might have like financial results reported or something like that, some type of sort of non-earnings event. But the point is, these are penny stocks, right? And so why am I talking about massive stocks like CRS? Well, because it's earnings season, right? And if you're looking for the smoothest moves with the lowest risk, and what do they say? Fast is slow, or whatever, slow is smooth. Um, you're going to have to check that army quote on me, but I'm pretty sure it's something like that. You want slow, predictable moves, and CRS is offering that low risk reward opportunity in the same vein as a GM. Okay, recently, this is what we're looking for: is you can risk $66 or whatever, and then you just get $3 initially. It moves right away from your risk. You can buy this. You don't have to look at your phone. You don't have to look at the market. You don't have to worry about some type of massive gap down. Like some of these stocks are just super choppy. I mean, this is recent light, went down 6% in a day. This AMSC, sure, when the market turns up, they move up with the market, but they're also very difficult. 9% down moves. So some of these are gonna pan out for sure, but in terms of ease of buying, I mean, the worst offender being CoreWeave, definitely just wick, 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 fail, wick, 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 fail, 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 fail. They may have had big runs in the past, but right now these are just very punishing. And so the whole sort of speculation sector has been pulling back. Perfect example, Plug Power pulling back. So all that to say, in a roundabout way, there's a reason some of these other stocks are on radar right now. So I could talk ad nauseum about what alloy materials mean, what Carpenter does, how they work with NASA's Jet Propulsion Laboratory. But if we're being real here, this is interesting because a lot of other companies are not interesting right now because they've already ran in the past month when the SPY went on an absolute tear. Yes, it's been on a tear since April, I should say, but August pretty much went sideways, right? For an entire month. And then only in September did we get another big move up. And now we're coming back to all-time highs after this looks super smooth, but I promise you, it did not feel that way. And if you were looking at your portfolio, it certainly didn't feel that way either, with this big move down a couple of Fridays ago and then a couple down days since then. So that's the idea. CRS, that's the level. And I don't think you have to exactly know what they do as far as manufacture of specialty metals. It's a big deal to know that they have that collaboration with NASA. It's a big deal to know that they have Alcoa as one of their biggest customer. So now you just have to say, is this company basically worth investing in compared to these other similar peers? So STLD is definitely one I've seen, a steel company. So if you take a look at that, recently had earnings, moved up on earnings as well. So the sector is definitely looking good. This isn't a sensational earnings reaction, but it's pretty good so far. This one is pretty illiquid comparatively. CRS is like maybe, I don't know, maybe double. They're closer than I initially thought, but this one's definitely more liquid, and the reaction definitely looks cleaner than this one for sure. So that's the idea. Those are the levels. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, click that join button. You can actually join on YouTube now. I've enabled the memberships feature. You also see a course for $1. You can join that on YouTube as well. Just read those instructions, send me that email, and I'll send you that course. It's $1. So I just can't directly host the course on YouTube. Still figuring that out. Hope that helps. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.